morning. It's 5 a.m. in New York City. I'm Matt Miller in for Danny Berger with your Bloomberg Brief. Here's what you need to know. Gold futures jumped as the U.S. is said to have put a tariff on imports of 1 kilogram gold bars, the most traded in the futures market. President Trump says he will nominate White House Council of Economic Advisors Chair Stephan Miran for a seat on the Fed's board, and Meta picks PIMCO and Blue Owl to lead a $29 billion financing for its data center expansion. In terms of what we're watching on markets this morning, gains across the board for equity index futures. S&P futures up 0.2%, Nasdaq futures up a little bit more, 0.25%, and the small caps gaining even more. Take a look at treasuries here. This has been fascinating because we've seen the 10-year just hanging around 4.20 all week long. It's coming up now to 4.25. After yesterday's trade, the 2-year at 373.75 and the 30-year at 482.73. Now to gold futures, which at one point I think U.S. futures jumped to 34.77. Actually, now higher. 34.83 is the level, so up 0.9% or $30 an ounce. Bitcoin right now down about 0.5%, 116,617. NYMEX crude and Brent crude both rising about 0.3%. But really gold front and center in terms of the commodities. For some stocks to watch, let's get back over to London. Valerie Teitel is here with an update. Valerie?
Good morning, Matt. Let's start with Tesla. There is some news that they are disbanding their Dojo supercomputer efforts. We're seeing the stock move slightly lower, down 0.5% in pre-market trade. This is a blow to Tesla's in-house AI efforts. Now they might have to lean more on NVIDIA for development in the future. Musk did confirm this on X, saying the employees will be reallocated across the firm. Let's move on to earnings because we have Pinterest falling pretty decently in the pre-market, down some 12%, over 12%. They gave some weak ad revenue here, but note that this stock has really outperformed since the April lows, up some 60%. So maybe not so surprised it's taken a back foot today, but this is off of earnings. Lastly, though, on earnings, I want to talk about Sweetgreen. Matt, it seems like the company is still having an issue selling these $20 salads to New Yorkers. They reduced their sales guidance, and we're seeing the stock really torched in pre-market, down nearly 24% for Sweetgreen. Matt?
All right, Valerie, thanks very much for that. And in just moments, we're going to speak with Janet Henry of HSBC on the president's Fed pick. And later this hour, Beeneet Kothari of Tekne Capital Management joins us for his take on this equity market. And of course, we're going to be trying to figure out for you all of the tariff news, from the potential of tariffs on gold bars traded especially out of Switzerland, to the Japanese car sector, whether or not it gets a flat 15% tariff or continues to see stacked tariffs up to 27.5%. Right now, though, let's turn back to the Fed. President Trump has picked Stephan Miran to replace the outgoing Fed governor, Ariana Kugler. The chair of the White House Council of Economic Advisors is an ally of the president and will fill the role until January. Here to discuss the move with me is Janet Henry, Global Chief Economist at HSBC. Janet, great to talk to you this morning. This makes sense, doesn't it? I mean, this at least pick of a temporary replacement, or just until the end of Kugler's January 2026 term, gives the president the optionality that he might need.
It certainly does give some optionality. I mean, it was a bit of a surprise to actually take the head of the Council Economic of Advisors to, as you say, put him in place and on a temporary basis until the end of January. So it gives him the optionality of keeping him there should Chair Powell actually resign. He has to stand down in May 2025, 26, it would appear, but he could stay on the board. But if he chooses to resign, there would also be another space. But depending on who the president wants to be the new head of the Fed, it gives him the optionality. If it ends up being Waller, then he could actually extend Steve Miran's term and keep him there on the Federal Reserve Board.
What's the likelihood that he picks Waller as the chair to replace Powell, and then someone else for the 14-year position then instead of Stephan Miran? I mean, he has to get 3 different confirmations through the Senate if that's the case?
Well, I think the first one is obviously getting through the confirmation of Steve Miran through, obviously the president will be hoping it will be in time for the September 17th meeting of the Federal Reserve. And I think it probably will be. There was certainly no problem getting through the nomination of Steve Miran as head of the Council of Economic Advisors. If the new Fed chair is Waller, then obviously he's already part of the policy setting community. Currently, he has a different view in terms of the relative risks of inflation from the tariffs and inflation expectations versus his concerns about the labour market than it would appear the rest of the Federal Reserve Board does. But I think his nomination would go through if that proves to be the case. But like a lot of policies at the moment, in terms of daily changes in tariffs and other measures around the world, I think all options are still on the table, but the president is obviously heading for an array of nominations that favour his preference for bigger cuts in interest rates.
But how much does this change? I mean, we only had 2 dissenters last time. Okay, the first time that we've had 2 dissenters since, I think, 1993. But you'd need a lot more to really sway or move interest rates, I should say.
You're absolutely right. I mean, it's interesting. You are getting more dissent around the world. We obviously had something of a surprise decision from the Bank of England yesterday in terms of, after the second vote, 4 members actually voting to keep rates unchanged. And just a few weeks ago, you had what's unusual dissent until very recently from the Reserve Bank of Australia in terms of a 6-3 vote, surprisingly, to keep rates on hold. Obviously, the Fed, the most important central bank, 2 dissents was highly unusual, but you have 12 members that actually vote. So you will need a Fed chair or influential members of the committee that can steer the rest of the committee in their direction, or we may just need to get to a period of getting used to more dissent on a committee, which obviously would have implications for markets, depending on who the individuals are and the overall discourse of what different members are saying when they communicate their divergences of opinion. And this is what we have already seen from time to time in terms of moves in currency markets.
Janet, what's your take on the possibility that there's a 39% tariff on kilogram gold bars coming out of Switzerland? I mean, isn't the movement of gold, the free movement of gold across borders, pretty important to central banks?
It is important in terms of free movement to central banks, but it also, fits with the idea that we've seen in other broader commodities that you get a fragmentation in global prices. We had what happened with copper, didn't we, when there was a suggestion that there would be tariffs on copper, and then you saw a surge in imports of copper into the US in anticipation of tariffs, even if it wasn't the full 50%. Companies front-loaded on the tariffs, and then it proved to be a bit less, and then we got clarification. So yes, you're absolutely right. It does have implications for central banks on the gold element, but it does underline this ongoing uncertainty regarding tariffs. For a lot of last week, the narrative was tariffs are set. They're high, they're not good, but they're lower than they were on April the 2nd. And a lot of people were saying, well, at least we now know where we are. Uncertainty is reduced. Here we are just a couple of days later actually saying we don't know where we are. We don't know what the tariffs are. We don't know what they're going to be today. We don't know what they're going to be tomorrow. And of course, it's not just gold. Before we know, we'll be thinking about what it's going to be for semiconductors. And are we really going to see the 100% on semiconductors from those countries that don't promise tens of billions, if not hundreds of billions of investment in the US?
But it doesn't hold markets back from hanging out at highs, equity markets, that is, Janet.
No, it doesn't. Markets have this amazing capacity to only look at the good news at the moment. And I think a lot of that does relate to the fact that actually global growth and even US growth has been more resilient than had been feared. Obviously, there is an uneven mix of growth in a lot of countries, including in the US. We always talk about just the split in terms of earnings and earnings resilience between most of the Mag 7 versus the rest of the S&P 500. And we know for some time there has been a split between what's been happening with the largest, most cash-rich companies versus the broad economy. And of course, we're seeing that elsewhere as well. We know when we think about all of the other policies coming through in terms of the big, beautiful bill and the impact of tariffs, it's the lower income households that will be hit more by the tariffs on goods and all goods, and that will see, be negatively affected by the big, beautiful bill, whereas that the higher earners will be, benefit more from the big, beautiful bill and spend more on services than goods. So you have still got this split, but as you say, equity markets focusing on the good news and the earnings, particularly for the AI sector, still very, very impressive because that's going to be the area of investment resilience, it would appear.
All right, Janet, thanks very much for joining us this morning. Janet Henry there at HSBC. Let's get to some of the other top stories trending on the terminal this morning. Intel CEO Lip-Bu Tan says he's got the full backing of his board after President Donald Trump called for his resignation over conflicts of interest. In a letter to his staff, the CEO announced that he has reached out to the White House to clear up what he called misinformation about his track record. And Meta has selected PIMCO and Blue Owl Capital to lead a $29 billion financing round for its data center expansion in rural Louisiana. Sources tell Bloomberg that PIMCO is set to lead the $26 billion debt portion of the financing, while Blue Owl is providing $3 billion in equity. And Tesla is disbanding its Dojo supercomputer team, with its leader Peter Bannon leaving the company. The team has lost about 20 workers to Density AI, and the remaining Dojo workers are being reassigned within the company. Sources say that Tesla is planning to increase its reliance for chips on external partners, including NVIDIA, AMD, and Samsung. Coming up, gold bars are getting tariffed. We think. We'll tell you the details that we know for sure and what that means for Switzerland next. This is Bloomberg. This is Bloomberg Brief. I'm Matt Miller in New York. Tariffs remain high up the agenda in the Trump administration following the Swiss president's failure to reduce tariffs on her country after a visit to Washington earlier this week. The Financial Times is reporting that the U.S. has imposed tariffs on imports of 1 kilo gold bars, dealing a further blow to Switzerland, which is the biggest player in gold refining. For more, I'm joined by Bloomberg's Brendan Murray, who tracks global trade for the U.S. And Brendan, we have a fantastic question from a viewer on this issue who writes in, I would love to ask if the huge purchase volume on gold was front-loading specifically because of the tariff anticipation, and as a result, this fed into higher tariffs for Switzerland. What do you think about that?
Yeah, no, that definitely happened over the past several months, and we saw it in the U.S.-Swiss bilateral trade numbers. The trade surplus that Switzerland has with the U.S. Grew by leaps and bounds over the past couple months, and that sort of draws the attention of the Trump administration when suddenly you're in the top 5 U.S. trade imbalances for the Trump administration. That puts a target on your back, and that's definitely what we're seeing with Switzerland. They came away from these latest rounds of tariffs with one of the highest in the developed world at 39%, and they're scrambling now to try to figure out how to get those tariff rates down, negotiate and continue those talks with Washington. But at the moment, I'm afraid what we're seeing with gold is what we're going to see with a lot of other things. Is there's just no real clarification. You go to the Customs Bureau, you ask for a clarification, and they give you some sort of ruling. But we're going to see a lot of these things. It's just happening with gold at the moment. But a lot of companies are going to need clarification on how these tariff rates apply to the products that oftentimes move across borders, don't get much value added, or sometimes, are products made by multiple raw materials that are made in one country. So the global trading system took 60 or 70 years to put together, and Donald Trump is trying to remake it in 6 or 7 months, and this is the result of that.
Brendan, I was pretty shocked to wake up and see this Japan story. I thought we were looking at 15% flat rate tariffs on their auto exports, and it turns out they're still paying, or they're still being charged stacking tariffs up to 27.5%. how did that not get clarified in the deal?
Yeah, I mean, this is what happens when you put together what one analyst has called napkin deals. They're not really codified in any sort of legal document. And this is what has happened with Japan. They were rushing to get something from the Trump administration, a reduced tariff level, and they walked away from that without any real assurance, anything guaranteed about what the rate is going to be on their autos. So their autos are now looking at 27.5% tariffs, but they're going to try. They think that Tokyo thinks that it has negotiated a 15% tariff rate, and we'll see where they end up on that decision with Washington. But that's the deal that the European Union got, and that's the deal that Japan thinks it got as well. We'll just have to see how it actually turns out on the official paperwork, the executive order or some document like that we'll need to see that makes it official.
All right, Brendan Murray, thanks very much. Brendan Murray covers all things trade for us here at Bloomberg. Now, over in Israel, the government's security cabinet has approved Prime Minister Benjamin Netanyahu's plan to take full control of Gaza City. The move is the latest escalation in the conflict, which has devastated the Palestinian territory and currently has hundreds of thousands facing starvation, according to the UN World Food Program. For more, let's bring in Bloomberg International Affairs opinion columnist Mark Champion. And Mark, this is interesting because as Israel becomes almost a global pariah, it's decided to almost fully take over Gaza. What do we know?
Yeah, it's a real choice. The context is that there's been building, condemnation and horror around the situation of civilians in Gaza. That Israel has consistently claimed that they're doing what they can to get aid in. It's not their fault. There are international agencies that aren't doing it right. But those claims haven't really been taken very seriously outside Israel. And now, in response to all this, what Prime Minister Netanyahu has decided to do is to go in and take the last quarter of Gaza that isn't already under Israeli control. That's Gaza City. And it's been avoided primarily because that's where the Israelis think that the remaining hostages are being held. So this decision is being taken. It's important also in the sense that Netanyahu knows that opinion polling is consistent, saying that most Israelis do not want to carry on going after Hamas if that is at the expense of the hostages. They want the hostages out. So he is taking a political risk here, but he's doubled down. And yes, it is an important moment.
In terms of what's going on over in Ukraine right now, or rather between the Russian and U.S. presidents, what do we know, Mark? They're going to meet potentially even without Volodymyr Zelensky.
Yes. So short answer is we don't know a lot. We do know that President Trump's envoy, Steve Witkoff, went to Moscow. He was very warmly received, and there was a lot of talk, on Russian media saying that this is going to go well. They wouldn't have received him in this way if they hadn't had a kind of clear idea of what kind of deal that they were going to make. It seems that what the Russians are thinking is to offer some sort of truce on the long air war. Because there are really two wars going on in Ukraine. One is, in the air at long range. Both sides now, it was originally just Russia, but both sides now can, attack targets well behind the front lines. And then you have the second war, which is the land war. So it looks like the Russians have decided that they may be able, be willing to call some kind of truce on the air war. Perhaps in part because the Ukrainians who used to really not, be able to, fight that are becoming increasingly capable and causing quite considerable damage to Russian infrastructure and logistics. So, we'll see. We don't really know. It is important that the Russians say they don't want to meet with Zelensky. That will be worrying to the Ukrainians because they will fear that that President Trump will simply give too much up.
All right, Mark, thanks very much. Mark Champion there with a wrap of what's going on in the hot wars around the globe. This is Bloomberg. This is Bloomberg Brief. I'm Matt Miller in New York. Time now for your front page news. First up, the Wall Street Journal reports that Intel CEO Lip-Bu Tan was already at odds with some board members before President Trump's call for his resignation. Sources say they've disagreed on whether the firm should stay in the manufacturing business or exit entirely. Tan's recent efforts to acquire an AI company are also said to have been stalled by the board. And the New York Times says President Trump ordered his education department to collect data on the race, gender, test scores, and GPAs of college applicants. Admissions data has increasingly become a focus of the administration as part of its effort to shift the ideological balance of academia. It is 5:30 in New York City. Good morning. I'm Matt Miller in for Danny Berger here with your Bloomberg Brief. Here's what you need to know. Gold futures jump as the U.S. is said to have put a 39% tariff on imports of kilo bars out of Switzerland. President Trump says he will nominate White House Council of Economic Advisors Chair Stephan Miran for a seat on the Fed's board, at least temporarily. And Meta picks PIMCO and Blue Owl to lead a $29 billion financing for its data center expansion. Let's take a look at what's going on in futures. You're looking at gains across the board on equity index futures, 0.25% on the S&P. If you take a look at treasuries, we see the 10-year rising back up towards 424. Okay, right now it's down a little, but it had come up yesterday from the 420 level that we saw since the relative reset on Friday. And then gold futures are where the action is. U.S. gold futures up more than 1% right now to 34.88. That should be, I believe, a record high. Bitcoin down 0.5%, but still at $116,000 in change. NYMEX crude and Brent both rising about 1 or 0.2%. For some stocks to watch, let's get over to Valerie Teitel in London. Valerie?
Good morning. Let's start in the AI space. Let's talk about SoundHound. Those shares absolutely flying in pre-market, up over 21%. This is a voice AI platform. It allows businesses a way to replace customer service with AI. They've seen a decent adoption from businesses. Their revenue came in with a beat, and they raised their revenue guidance for the fiscal year. So that AI stock jumping in the pre-market. Also staying with AI, but a bit more of a negative story. Tesla is disbanding its Dojo supercomputer team in what can be seen as a blow to its AI. Its in-house AI efforts might be now leaning more on NVIDIA for that as it develops its autonomous vehicle technology. So Tesla on the back foot, down nearly 0.7% in pre-market trade. Lastly, another earnings, Sweetgreen, saying that $20 salads are going out of fashion, slashing its sales guidance. Those shares are down nearly 24% in the pre-market. And Matt, maybe most importantly, they're ending their offering of healthy air fryer French fries as soon as next week. This was an offering that was launched a few months ago in order to attract diners back into the office, but it's created some complications with its business. Matt?
I haven't tried them, but that's interesting for sure. Valerie, thanks very much for that. The Nasdaq 100 hit another record high thanks to a 3% jump in the stock of Apple. For more on tech, we're joined by Beeneet Kothari, Principal Portfolio Manager at Tekne Capital Management. Tekne is a global technology investment firm with $1.2 billion in assets under management. You run that after previously, I guess, working for Druck, right?
Yeah.
So very interesting stuff. And you look more at overseas tech, at emerging markets tech, rather than Nasdaq stocks. What do you make of that battle? I mean, is U.S. really still the capital of technology globally?
I mean, we think there are more than 7 good stocks to own in the world, and the whole world's focused on what's happening with Mag 7 in the U.S., but the AI boom that's experienced here is also just beginning to happen in Asia. It's just beginning in China. It's just beginning to get deployed across LATAM, and no one's focused on it. And that market cap size should be over time a $15 trillion pool, and today it's a fraction of that. So we think there's a massive, massive runway ahead. I mean, China, as an example, the DeepSeek moment was just this year. That equivalent moment in the US happened at the end of 2022. So we're in year 4 in the US. They're on day 150 in China. So we think it's extremely early and people aren't focused on it.
All right, so what are the, would-be Mag 7 stocks in EM?
Well, there's a number of them. On the AI boom, one of the stocks we like a lot is called GDS. It's the largest neutral data center in China. And so the way we think about GDS is this is the landlord of AI in China. It's neutral. You don't need to bet on a particular technology. And the other thing that's happened in China is over the last 3 years, because the market was in a bear market, there wasn't a lot of overbuilding going on. So what's happened this year in China is all this demand has come. There's all this excitement post DeepSeek. There's a build out happening, and there's no supply. And so you've got a really, really good setup on a supply-demand basis, which is what matters with real estate assets like data centers. Contrast that with the U.S. In the U.S., you've had huge demand boom, but now supply is starting to come in every day. You were talking about the Meta news. Every day there's bigger and bigger data center build-outs. So the supply-demand balance in the West is tricky. The supply-demand balance in the East is obvious. The other one we really like is TSMC. I mean, this is a monopoly. Their market share in leading-edge semiconductor nodes is over 80% in 2 nanometers or better. And then, one last one to point out is SoftBank. This is a company that's been derided for a very long time. But when you look at the company today, Masa has managed to build a portfolio of vertically integrated AI companies. He owns the semiconductor layer. He owns ARM with licensing layer. And by the end of this year, he will be the second largest shareholder of OpenAI. And you can, people are going crazy trying to buy OpenAI here. You can buy OpenAI for free inside of SoftBank because it's trading at such a massive discount to what its assets are worth. So those are some of the stocks that we think are the Mag 7 of the future.
What is the adoption like in EM versus the US? Because here, it's enterprise and consumer both picking it up at a rapid rate. And of course, there are far more people, in China and India, exponentially more than there are here in the US.
It's just beginning. I mean, you've got to remember this whole boom that's happening in the West is about 3 years old. The ChatGPT moment was November 22, so we're barely in year 3 of it. That is just beginning to happen, but the adoption in the last 6 or 12 months in a place like China has been massive. I mean, even, you talk about India, and OpenAI's biggest market, ChatGPT's biggest market, is India. So the adoption in a very short period of time has already been massive. The enterprise adoption is coming next, but if you look at Tencent, Baba, some of the big Baidu, driverless cars, we get excited about it here. China has 10 of them. So in many, many cases, these companies are much further out ahead, much more advanced than what we have been here in the West.
What's your take on, NVIDIA dominates, obviously, but the U.S. has put restrictions on the exportability of the highest tech chips, and that, at least according to the CEO of NVIDIA, opens up competition to possibly, come up against them? I
think he's both self-serving in some of his comments, but right, which is, it's nice, if you're him, you want a monopoly. You want a monopoly everywhere. In places of the world where you don't have a monopoly, you create room for competition. That big competitor is Huawei. The issue with Huawei is not just a chip company. They compete up and down the vertical chain. And so if you're Alibaba or Tencent, you will use Huawei if you have to, but you wouldn't want to. So I think the fact that our current president has lifted the H20 ban is a boon not only to NVIDIA, but it's a game changer for China. So here's what's going to happen this year. you don't know how fickle this administration will be with this ban. We know the conflict between U.S. and China is not fully resolved. So I think what's going to happen over the next 6 months as this ban has gotten lifted is these companies are going to stockpile. They're not going to buy just for what they need this year. They're going to buy probably because you sort of don't know when the winter will happen again. And so I think the amount of purchasing that will happen and get deployed in China this year could be an absolute record number. And no one's ready for it.
Well, we are now. Thanks to you joining us on the brief. Beeneet, thanks so much for coming on the program. Really appreciate the intel. Beeneet Kothari there of Tekne Capital Management. Now, coming up, President Trump picks a new temporary governor for the Fed's board. We're going to unpack all of that next and what it means for the replacement of the chair. This is Bloomberg. This is Bloomberg Brief. I'm Matt Miller in New York. President Trump has made his pick to fill Fed Governor Ariana Kugler's seat. His nomination goes to Stephan Miran, chair of the White House Council of Economic Advisors. Joining us for more detail is Bloomberg DC breaking news editor Kashi Klimashinska. Kashi, thanks so much for joining us. What do we know about the confirmation process? I gather the Senate needs to come back, and then they'll only have 10 days, 10 legislative days to do it.
Good morning, Matt. So indeed, President Trump has picked a loyalist, Stephan Miran, somebody who he knows, who he praised on Truth Social, and who we know supports lower interest rates. But now he has to be confirmed by the Senate, and Senate is out for August recess. Lawmakers will come back in early September, and most likely they will pick up the nomination very quickly. But still, it will be what JP Morgan is describing as a Herculean task to get Miran on the Fed board by the next meeting in the middle of September.
So is Waller most likely the pick to be chair? Because if Chris Waller is picked to replace Powell and Miran is only a temporary replacement, then in January, the president will have to fill another seat.
That's right. So Miran is just a temporary replacement. He will serve on the board until January, and then President Trump gets to pick somebody for another 14 years. So he could add a new person, and that person could later be promoted to become the Fed chair when Chair Powell's term expires in May. But Trump could also choose from existing members of the FOMC, and Chris Waller, who you mentioned, is a very likely candidate. We had some very good reporting yesterday saying that the members of the Trump team really like Waller. In fact, Stephan Miran was yesterday on Bloomberg TV, and he also praised Waller. We know that Waller also supports lower interest rates.
No doubt Saleha Mohsen has been breaking news like crazy in the Washington, D.C. bureau. I want to ask about the FT report that the Trump administration is imposing its 39% Swiss tariff also on kilo bars, causing a spike in the gold market. What's the latest on that? And trade talks with Switzerland.
Matt, that's right. So gold is already very expensive, right? It has been gaining in 2023 and 2024. In fact, last year, gold outperformed the S&P 500. And now we have this surprising news that gold will be subject to tariffs. So in case of Switzerland, the key hub for the metal, the tariff is 39%. And so that, according to Financial Times, that tariff would be applied on the metal that sent New York futures on the metal surging. And of course, we'll look for more explanations from the White House. Bloomberg News didn't see that notice specifically about the metal.
In Japan also, it seems that there was a misunderstanding about the tariff rate that would be applied to auto exports.
Indeed. So Japan's key chief negotiator was here in D.C. earlier this week. He got a meeting with Commerce Secretary Howard Lutnick and with Treasury Secretary Scott Bessent. And after that meeting, a Japanese trade negotiator came out and talked to the reporters. And he said that the U.S. promised that Japan will not get the tariff rates stacking. So it will only get the 15% rate. And more importantly, that imports of cars from Japan won't be paying the 27.5% levy that Japanese cars are facing now. Japan wants to bring that down to 15%. That's the most important issue. But again, those were just promises. We have yet to see some paper coming out of the White House, and even Japan wasn't able to say when this spoken agreement will be put to paper.
Yeah, Toyota saying it's going to take a potentially $9.5 billion hit to annual earnings because of these tariffs. Kasia, thanks so much for joining us. Kasia Klimashinska there out of Washington, D.C. Let's turn now to technology. In response to President Trump's call for his resignation, Intel CEO Lip-Bu Tan said that he has the full backing of the company's board. He wrote in a statement, quote, "We are engaging with the administration to address the matters that have been raised and ensure that they have the facts." Joining us now is Bloomberg's executive editor for Global Tech, Peter Elstrom. And Peter, this is interesting because the Wall Street Journal has reported that, in fact, Lip-Bu Tan's board had already had some issues with him. What do we know?
Yeah, well, the news is moving very quickly here. Of course, yesterday we had President Trump come out on Truth Social and talk about how he thought Lip-Bu Tan should resign immediately. He talked about his conflicts of interest and exactly what that meant for Intel. Intel, of course, is getting billions of dollars from the U.S. government through this CHIPS Act to build some domestic capabilities within the country. So there is some influence there from the federal government. And what specifically Trump is referring to is some of the investments that Tan has made in the past. Tom Cotton, one of his allies in the Senate, has talked about investments that he's made in China. Also his long leadership at Cadence Design System, which just got in trouble for selling some products to a military university in China. It is true that Tan spent decades making venture capital investments all around the world, including East Asia and China in particular. He invested in a bunch of chip companies there. But that was back in the years when this was much less controversial than it is today. He also sat on the board of SMIC, really the leading manufacturer of semiconductors within China. So now there are a lot of questions. And now I think Intel, the board, and Tan himself are going to have to explain a lot of what they've done so far to insulate Tan from some of those investments and to be able to allow him to continue to lead the company at Intel. But it's a very tense situation at this point. If you got the president calling for the resignation of your CEO, it becomes pretty serious pretty quickly.
Especially if your CEO isn't investing as much in U.S. Production as he had been expected to under the previous administration.
Right. That's a very important question here. Tan's predecessor, Pat Gelsinger, had laid out a quite ambitious plan to make investments in the U.S. He wanted to, Intel's strength historically has been in these processors that run PCs and laptops in particular, but he wanted to pivot into the foundry business that's now led by TSMC. He wanted to be able to compete there. He was going to make some very big investments to be able to do that. Now, Tan is saying, he said something to the effect of, I don't believe that if you build it that they're going to come. They don't have customers for that foundry business right now, so he's reconsidering whether they want to move as aggressively into the foundry business, whether they're going to hold on to some assets or not. So those strategic issues are certainly a big question for the company. Investors want to know his answers. But for the U.S. government, which has sort of made this bet that Intel is going to be a cornerstone of the effort to rebuild the U.S. chip industry, they want to see Intel leaning forward, making big investments, trying to rebuild some of those fabrication facilities that have now gone to places like Taiwan and South Korea in particular.
I want to shift gears to Tesla disbanding its Dojo supercomputer team. Elon Musk saying that essentially they had redundant investments in chip design.
Right. For Elon Musk, of course, he has many bets in many different areas. At Tesla, this looked like a pretty important one. The Dojo team was supposed to be able to build this supercomputer that was going to help with their autonomous driving. Of course, autonomous driving has been a big goal of Elon Musk. He's talked about it for many years. It's always kind of out on the horizon. But they haven't made the kind of progress there that satisfied regulators, certainly. And I think even Elon Musk would say that they're a bit behind where they want to be in that space. So now they're pulling back from the supercomputer effort with Dojo, and they're going to turn to some outside vendors to see if perhaps that's going to accelerate this initiative a little bit more.
All right, Peter, thanks so much for joining us. Bloomberg's Peter Elstrom there, talking tech from London. Now, we have over 30% of companies reporting earnings already, with results driving stocks to all-time highs. For more, Bloomberg Intelligence Chief Equity Strategist Gina Martin-Adams joins us now. So, Gina, it does look like surprisingly strong growth this quarter compared to what we may have expected a week or two before earnings season kicked off.
Yeah, absolutely. We're actually almost all the way through the S&P 500 earnings season, even though we're just getting kicked off in much of the rest of the world. And it's been a fascinating season, one of the strongest beat rates we've seen in years, with more than 80% of companies beating expectations. Expectations, of course, were very, very low following the April Liberation Day announcements and then sharp reversal. I think analysts generally really struggled to capture what was going to happen in the second quarter, and it turns out that earnings were quite a bit better than anticipated. We're looking at S&P 500 earnings growing just above 10% for the quarter. That's much better than the expectation for less than 3%, which was set at the beginning of the season. That's still a little bit of a slowdown from where we were at the end of last year when we were growing 14% year over year, or even in the first quarter, which was 13% growth, but nonetheless very respectable growth for S&P 500 companies.
Yeah, sorry, I didn't mean to throw you. I think I said 30%. I meant to say 90. In fact, I'm looking at the EA screen on the Bloomberg.
Yeah.
453 companies have reported on the S&P 500 as far as I can see. So, almost all the way through. Is this kind of growth expected to continue? I mean, are we expecting 10% or double-digit earnings growth through Q3 and Q4?
No, analysts see a consistent slowdown. I mentioned that the peak in earnings growth was in the fourth quarter of last year. We're just seeing a very slow year-over-year growth deceleration so far, and that is generally expected to be the case into the second half of the year. Analysts are anticipating about 8% growth in the third quarter, about 7% growth in the fourth quarter. A lot of this is coming not because of an anticipated revenue growth slowdown, but generally because of an earnings growth slowdown resulting from some margin pressures emerging. One key that we're teasing out of the second quarter earnings season is that it should be peak gross margin growth for the S&P 500. Across the board, analysts are expecting both tech and ex-tech margins to decelerate going into third and fourth quarter. We've also seen an end to the positive estimate revision wave that naturally occurred with these beats in the second quarter. Analyst estimate revisions have been neutral now for the last week or two, as net-net, the positive news is largely now in the earnings forecast.
Yeah, they've come up pretty drastically. I look at the EEG function a lot on the Bloomberg terminal, and it's been, almost hyperbolic until, as you say, the last week or so.
Yeah.
Gina, what about the spread between, Mag 7 companies and the S&P 493, or, the top 10 earnings growers and the other 490 companies? How is that divergence looking?
Yeah, it's really phenomenal in the second quarter. Once again, it had been closing for the last few quarters. It opened back up again in the second quarter as the ex-Mag 7 or even ex-tech industries suffered a bit more from a slight slowdown in economic growth and some of the tariff pressures that emerged. Generally, what we're seeing is Mag 7 companies posting about 25% earnings growth in the second quarter, ex-Mag 7 somewhere around 3% growth. So really big divergence there. What's fascinating about the outlook is where analysts are anticipating that we will revert back into a closing of that gap. By the end of 2026, the analyst forecast implies Mag 7 will be growing at about 14%. Ex-Mag 7 will also be growing at about 14%. So I think you're going to see, if the analyst consensus is right, you're going to see the Mag 7 stocks continue to slow their growth rate. Remember, 2 years ago, they were growing at 50%. Last year, it was close to 30, 35%. Now we're looking at 25%. Next year, about 15. So Mag 7 generally slowing growth, deceleration in earnings momentum, if you will, with the rest of the groups in the S&P 500 expected to make up some of the slack there.
So with all that in mind, Gina, what kind of valuations are we looking at for price to 25 earnings or price to 26 expected 26 earnings?
Yeah, you still have a very big valuations gap that has emerged in consistency with that earnings gap. So if you look at the gap between tech and the rest as an example, you're seeing tech stocks trading above all-time high levels, at least going back to the tech bubble. Tech stocks trading even at a greater premium than they were at the peak in the market in 2021. So an enormous premium for tech stocks. Whereas if you look at an equal weighted index or the index excluding tech, it's still trading at about its pre-pandemic high, but nowhere near the valuation levels of the tech space. So you've seen capital basically concentrate and hide in the tech and the Mag 7 themes simply because there is very strong and predictable earnings growth. The rest of the index still arguably somewhat discounted.
All right, Gina, thanks very much. Gina Martin-Adams there, Bloomberg Intelligence, coming to us out of Dublin for some reason, I guess. Hopefully there on a holiday and enjoying some Guinness. Let's take a look at what's going on ahead today. We're almost through this earnings season. As we pointed out, Wendy's reports before the bell this morning from the great state of Ohio. Then Fed speak from St. Louis Fed President Alberto Musalem at 10:20 a.m. Eastern. And then on Saturday, we're going to hear from Fed Vice Chair for Supervision, Mickey Bowman. In terms of the markets right now, take a look at the S&P futures, currently up 0.25%. The 10-year yield around 425 at 424.61, and gold futures at 34.93, a record high. This is Bloomberg.